Really sorry about that, guys. We've had to literally reset, and I mean literally reset the entire system. Whatever it is, MT4 and this system are not best of friends. My deepest apologies. We will fix it for next time. All right, so I'm just going to start typing up so we can wrap up real quick. Just go through 5 asset pairs. So week, starting today's 6th, right? Monday, 6th October. Right? And so, all right. So these are the assets I'm going to be tracking. 1, my core asset. I look at this every single week, EU. It's an European currency paired with the dollar, so it's a major, it's the most liquid Forex. It's basically the most liquid asset in the world, period. And it moves, it has volatility at the times of the day where I'm likely to be in front of my charts. As a rule, if you're trading an asset, ask yourself, who are the people around the world who are most likely going to be trading this as their day job? If it's a currency, look at the two currency, it's a currency pair. Look at the two currencies in the pair. So EU means euro and dollar. The people who are going to be working in the euro market, what time zones are they going to be trading? The people who are going to be working in the dollar market, what time zone are they trading? And when do the two converge? So for instance, if I were trading, say, Australia JPY, the majority of that's going to be happening when I'm asleep. The Asian markets are going to be open when I'm asleep. So I don't want to trade those pairs. I want to trade pairs or assets that are open. So NASDAQ is a European, an American index. When are the people who are trading in America going to be working 9 to 5? What's 9 to 5 in America? What's that in my local time? So that's how you figure out these things. So EU, then my backup currency pair is GU. So if EU is working, GU is working, they usually trend together, sometimes one does. So if I don't see what I like in EU, I'll check GU. The third one is GBP JPY. So let me just put this out in full. We call this the B. So we call EU fiber, GU cable, JPY the beast, because it does some really beastie things. It can be very volatile, which if you know how to trade, you like volatility. You only don't like volatility if you're guessing. And then this week I'm going to be looking at NASDAQ, so that's US 100. I'm also going to be looking at gold. So those are my 5 pairs, right? So I'm going to go through them one by one now. Now I'm an intra-week trader. I showed you something on Saturday you can use for scalping, but I personally am an intra-week trader. I have a scalping account. So I'll see if I can scalp live at least once this week. So now that I know that's what I'm looking at, I'm going to come back to the chart. I'm going to go one by one. So let's start with EU. Okay, so let me just open up a fresh chart. Just ignore all of that. These are all teaching snippets that I'm trying to curate for a book I'm working on. Okay, so EU. I have my own template that I set up for how I like it. And these days I like to give it a little twirl. So I will put the background, let's see, let's put this one, right. Okay, so easy peasy, EU. Now, I told you how I work. Because I'm intra-week and I am an intra-week trader, I go into the week trying to figure out what kind of candle am I going to get this week. Up, down, sideways. And then I trade the candle. So remember, in an up candle, You're going to have triangle with a wick, right? So let's call this a down candle, not you. Let's call this a down candle because it's shaded, right? Well, on a down day, let's look at this on your charts. This is a 1 hour time frame, so each divider is a day. Let's look at this down day here, for instance. How did price go? It opened, went up a little bit, found resistance, came down, found support, and then closed up a little bit. This here is exactly what you see here. 1 second. Okay, that's what you're seeing here. It opened, formed the high. That wick you see there is the high it formed, right? Then it retraced back down to the open, and then started forming the body, pushed down, came down, formed the low, pushed back up and closed. That's a bearish candle. A bullish candle will be the exact opposite. Let's look at it. Let's look for an up day here. That's an example of an up day here, right? Stereotypical up day. Not every day is like this, but 70% of them are. It opened, formed the low, pushed up, formed a high, and this one, there wasn't much of a drawback. But if we use this day, okay, this is a good one. So it opens, forms a low, pushes up, forms a high, and then retraces to form a close. That's how every candle is formed. And Joe, I want you to get this. This works for a year, a month, a week, a day, a session. Right? So if you're scalping, you need to analyze what the session's candle is going to look like. You need to have, now you can bring in a higher time frame bias, meaning based on what's happened on the higher time frame, you think it's going in this direction, but you need a contingency plan. It can always go against you, even if it's going to go on a high time frame direction eventually. That day, that week, that session can go against you as a retracement. So what's my hypothesis for up? What's for down? What am I favoring? How will I catch either side if I want to? Now, I am an intra-week trader, which means I am looking to catch a weekly candle. Now, I will go down to the time frame that has a week as its divider. What time frame has a week as its divider? Joe, what time frame has 1 week as its divider? The answer is 4 hour. So when you go to a 4 hour chart, each divider here is a week, right? From here to here is a week. From here to here is a week. From here to here is a week. And then you can actually see that candle form very, very clearly. For instance, this week here, right? Price opened here, pushed up, from the high, pushed down from the low, and then closed in between. Right? Perfect. Also, you want to see some sort of consolidation forming before the manipulation of the expansion. And I showed you guys this last week Monday. So for those of you who were in here last week Monday, the video is all up. Let me show it to you again. You're going to see this pattern in almost every single time frame. But the higher the time frame, the more you can trust it. You want to wait for a high to be formed, that high to be taken out, a market structure break, so a low to be taken out, right? So I'm doing this the wrong way, sorry. So a low or high to be taken out, right? So there we go. The low's taken out. And then you have a market structure break to the upside. Once that happens, price runs. But you don't need to wait for that high. The first market structure break after that liquidity sweep, right? In this case, it is here. I want you to see what happens. And go back on your chart and look at this for the last year, or as far back as your chart would take you. On any single time frame. So this is a high that's taken out after the low is taken out, right? It's called a market structure break or a break of structure. What happens? If you put a Fibonacci from the high to the low, price comes back and touches 50. And there you go. Don't believe me, just go this on any chart, any asset. Look back 1 year. Get good at seeing it. If you can't see it, you're gambling. If you can't see this and you trade, you are gambling. All right? Now, I want us to now, okay, let's show it on this week here. So on this week here, this was a high that was swept. You may not notice it, but it is a high. That candle is higher than that one and higher than this one. So sweeps to the upside. And then you have a break of structure to the downside, or what you call a change of character in SMC. I don't know when you guys started calling it change of character. When I was trading, we just called it market structure break. Right? What you guys call a change of character now is what we call the market structure break. And what you call a break of structure, just the highs and low forming, we just called normal market structure. But doing my reading, the terms have changed while I've been away. No problem. All right? Look at this, Joe. Can you see this here? This is a signal that I use every single week. A high taken, a break of structure to the downside. Right? Does the market come back? Yes, it does. And what does it do? It sells. But I don't need to wait for this to happen on the 4-hour chart. Once I see this thing happening here, right, I can dig down to a lower chart, and you usually want to go down 2 charts every time. Weekly to 4-hour, 4-hour to anything from 30 minutes downwards. I like 15. 15 or 30 works. If you start from monthly, you go to daily and 1 hour. If you start from weekly, you go to 4-hour, 15 minutes. If you start from daily, you go to 1 hour, 5 minutes. You can also do 15. It works very nicely. This white section in the chart, let's go down to a 1-hour chart. Now remember, in the 1-hour chart, every divider is a day. So see what happened. So that's the high that was taken. And notice it's the high of a day. And it's actually 2 highs, which is very good. An Asian session. This line in my chart is always the Asian session. I've taught why I like it, but I don't have time to teach that today. So that high's taken there. And you can see there's a 1-hour market structure break. Can you see that? High's taken there. There's a 1-hour market structure break. Where's the market structure break? That's the low of the market structure break. Once this happens, we're bullish or bearish. So on this point, we're looking for opportunities to sell until we see the reverse happen. Right? Okay, so how would we have entered this trade? This was the trade I took last week, by the way. No, not last week. The week before. I didn't take it. I just analyzed it. I'll show you the picture. In fact, let me show you that picture. Let me show you that picture. or what it looks like when you get it correctly. Okay, so desktop, screenshots. Okay, so date modified. All right, so from here, okay. Let's open with preview. Okay. Okay, no, it's not one of these. 1 second. Okay. Ah, there we go. Okay. Cool. Cool. I want to show it to you historically, so teach you the principles so you know what we're looking for during the week. And we're not just going to chase any trade we see. We're going to stalk the market till it comes into our zone, right? And then we're going to take it. All right? So that's it here. This is it. Can you see that? That's what it looks like. A high was swept here. And then the market structure, now this is on a 15-minute chart, market structure breakdown. It comes back up into an area of liquidity and it sells. Right? Okay. Today is an example of this. Let's see, did I take the screenshot of today or the end of last week? So that's an example I was talking about the bearish. Okay, that's fine. Okay, no, I didn't. Okay, that's fine. Because I took a screenshot of what I expected to happen today. No, I didn't. Okay, that's fine. Anyway, so that's what we're looking for. We go there. You didn't ask yourself what is sponsoring this sell? The answer is, Joe, do you know what an order block is? Do you know what an order block is? There's an order block up there. It's not that. That's fine. So it is going to be this fair value gap here. That is what we call a fair value gap. You would literally wait for price to come back in here and engulf. This happened in Asia, so it's a trade I wouldn't have taken. But let's see if we can repeat that live. It's very nice doing it on a chart that's already happened already, right? So this is what we're going to do on EU very quickly. This is the new week forming. I'm going to put some lines on the chart. This is the open of the week, right? This is very important because it's going to tell us eventually, at some point, it's going to be clear what direction the week is going. Now, we're beneath it. That would suggest we're going up. But then we could come down, go up, and then come down again. So that I will always put, I will always put in a purple. So I do my charts, you can do yours anyhow. But I'm going to put that in a purple, where's the purple? No, purple. Where's Orchard? Something about this monitor is changing the colors, how they usually appear. Where is Orchard? Joe, can you see Orchard? There we go. So that's going to go. So at any point that week, I want to know what side of the open am I on. I'm not just taking trades willy-nilly. I want to know what side of the open am I on. Now, Monday came all the way down. Okay, so let me show you what happened today. The same principle. Look at this here, right? Price took out a high. You see that? Now I put daily highs in green and daily lows in red because those are very important to me. The key levels, especially at the time frame I trade. Right? So it took out a high there. Did it break market structure? Yes, it did. There. It came back up, and what did it do? Now, how do I know what direction I want to be stalking this in? Well, this is the way I do it. And it works very well for me. I know people say that the market's an I used to actually teach market. The market was run by an algorithm because one of the people who mentored me said the same thing. I don't believe that anymore. I do believe large institutions trade using an algorithm. So the market isn't run by an algorithm, but the people who trade, when you're trading 50 million, 10 billion, they don't just trust you to stare at the screen. They actually have algorithms that predict price. And they, in essence, it means there must be something a machine can look on a chart and decide what trade to take. And this is what I have worked with. I want to see price take out the high of a day, and within the next 3 days, take out the low of any day. It could be the day whose high took out. It could be any other day. Right? It could be its own self. It could be the low of its own day. Right? So, take out a high, take out a low. We're going to put the low in red. Boy, this screen looks different from what I'm used to. Where's red? Okay. What's wrong with the screen? All right. Now, when what I call a sell protocol. From this point on, as an intra-week trader, I'm hunting shorts until I see this reverse. I literally need to see this exact same thing reverse. I need to see, so for instance, after taking out this low, if it then went out to take out this high, then I'll be back bullish. No, sorry, this high. This one, the one that started it. At this level, I'm back bullish. But because that hasn't happened, I'm looking for a sell. Well, if I'm looking for a sell, get my Fibonacci out. Isn't this a perfect Fibonacci? 23.6, 70 something, right? Now I need a confirmation. My confirmation is in New York or London, I now want to see a bullish engulfing candle, minimum. 4 hours better. I love 4 hour, but I'll take an hour if I'm confident of the setup. So, ladies and gentlemen, this was the first bullish engulfing. So from here to here, it came back and sold here. Once it started coming back up again, so initially when we did this, look at this. This was the first trade I took. Right? This was on Wednesday, Thursday. This is the first bullish engulfing. Entry here. Stop loss there. 1 to 1, 2 to 1, almost 3 to 1. That's just on a 1 hour chart. But I didn't enter on a 1 hour chart. I refined it to a 15-minute chart. And I took my entry on 15 minutes. There it is, right? So entry here on this 15-minute engulfing, stop loss there, 1, 2, 3, 4, 5 to 1. I caught 4 to 1 of that trade. That was one of the entries I showed you on the other account, right? So how do we repeat this week? Well, what I've shown you is a long way to do it. This is the way I look at it. This is a shortcut for me. On a 4-hour chart, I want to say a 4-hour level taken, and I want to see an engulfing the other way. That's it. 4-hour engulfing the other. That's the shortcut. I don't have time to be in front of my laptop all day to refine the entries. I want to see a 4-hour the other way. When I see a 4-hour the other way, I'm going to drop to a 1-hour chart. Was there a 1-hour engulf? Was there a market structure break on a 1-hour chart and a 1-hour engulfing in the direction I'm going? If there was, that's my signal. I'm in the trade. I will then drop to a 15-minute chart to take my entry. And win or lose, we go. Now, what do I expect price to do here? Well, we had an indecision. This is a consolidation. So price is going to manipulate out of this. The question is in what direction? If we're going long, then this already is looking good, because this is the middle of the consolidation here, right? So price is swept out. I expect it, if we're going long, to push up into an area of liquidity, most likely this one here, because now this order block has been tapped before. It could be this order block, or these two highs are places where a lot of stop losses are going to be. So to come up there, right? Potentially come back down somewhere here and then run. Where? To somewhere here or just above there. So this is my that's what I call my bullish hypothesis. Of course, the market could choose to do the exact opposite. In which case, if it's going to go down, then I need it to form a high somewhere. Now, I don't want it to go up here if it's going to go down. That's not good for me. It could go there. It could go there to come back down. But seeing as we've already pushed up once, and then this looks like a very clean area for me to get to. Somewhere above this consolidation into this. So somewhere around here, right? And then I wanted to push, 1 second. No, that's the middle. Then I wanted to push down past that point and target these lows. This one is still not gone. That's what I was targeting last week with my trades. So definitely past that. But if you're going to go past that, well, this is very close. So why not just take all of them together? They could leave the liquidity there to come back for another point, and probably also this one here. Maybe even this one. We'll see. Something like this, right? It might not even get all the way up there. It might short from here, from this order block in here, this one here. This is something like this, right? Here, somewhere in this region. And then to close the week, come back up and close. That's my bullish hypothesis. How am I going to know it's playing out? Well, on 1 hour chart, so I'm still going to leave that line in. That's the middle of the consolidation. That's the opening of the week. Now, let's go to a daily chart. Where are we in the daily? This is where we are. See, the same pattern happened here. Price took out a high, right? And then broke market structure. First here, and then here, and then retraced. To feel a fair value gap, that's these lines here, and then it looks like it's coming down. The problem is, every time it's coming to this order block here. So I was very, very bearish until this evening, because every time price, look here, it pushed back up. Now here, it pierced it. Look, it actually pierced it here, right? This particular candle. But we're still in this wider order block anyway. This is the order block right now, holding everything up. But the fact that we've pierced this candle now has me a bit concerned. But something in this region keeps, so now if I was trading just a 4 hour, I would want to see price make up its mind what it's doing here. I want to see displacement to the up or the downside. Either a move that breaks this barrier, like a candle, for instance, like tomorrow, for instance, if tomorrow closed like here and was a full candle, right? Like a full candle like this, okay, then it seems price has made its decision, right? Or this same pattern down. For instance, if today had broken this low with force, momentum. So right now we're in indecision on the daily chart. I think I know what's going to happen, but I don't know. And I'm not paid to be Nostradamus. I'm paid to make money. So I can, on a demo account, fine. But if I'm live money, I'm not touching that on a 4 hour chart for now. So what can we do? What am I going to be doing until this sorts itself out during the week? I'm going to be trading lower time frames. And this is how I'm going to do it. And I want to show you how it worked last week, so you can know what to look for this week. Let's move to futures. Let's go to the NASDAQ futures, all right? Let's do another asset class. The same principle, like for instance, look at this. So this is a 1 hour chart. Price took out a low. See that? It's the same pattern, and then took out a high. Okay, what's it likely to do? Come back somewhere in here to pick up some liquidity and push up. And the scary thing with futures is this is the highest the NASDAQ has ever been. So there's nothing, look, even on a monthly chart, there's nothing above it. There's no reference point. Pardon? Yes. So But this is what I would expect, right? For it to push further up. Now, it could betray us. It could push down here, right? If it breaks that level, then this was a stop hunt of here, in which case it would then come back up to retrace somewhere there and then go south. So, excuse me, that's my bearish hypothesis for NASDAQ. This is my bullish hypothesis for NASDAQ. So this is my bullish hypothesis for NASDAQ. How am I going to know what to trade? Well, I've showed you what I would do as an intra-week trader. Let me show you what I do as a scalper. Now, let's take last week, shall we? I want to show you something very interesting. I don't think, well, maybe you have, but I doubt you've seen this before. And once you see it, you can't unsee it. Once you learn to see the market this way, you are forever scarred to anything anybody else puts on the chart. So, this is the week we're looking at. Last week, right? 1 second. So, last week was a clear up week, right? Price was clearly in the up direction, wasn't it? See that there, right? Clearly up. Okay. So, 1 second. I think I know what may be wrong with this screen. See that? Okay, no, it's not. Okay, so let's look at this. First, let's start with a 1 hour chart. Because I want to show you something. If you're scalping and you're not doing this, you're wasting money. So this is a week, 5 days. Monday, Tuesday, Wednesday, Thursday, Friday, right? Okay. So let's start the week on Monday. We don't know anything that's going to happen for the rest of the week, right? We're just trusting and hoping and praying for good fortune. This is Monday. Now, how did the week go? It opened. Can you see? It opened. It eventually formed a low. Now, notice it doesn't have to go straight to the low. That's why I told you, even though Monday was down today, it doesn't have to go straight to the low. But somehow, it eventually got to the low. We don't care how it gets to the low, but it got there. Right? And then it formed a high. And this is one of those weeks where it just basically ran up all the way to the week. But that was the high there, and then it retraced a little bit. Okay, fine. What happened day by day? Just watch this for me, right? This is Monday. I'm going to put a couple of candles, right? The first candle I'm going to put, 1 second, not candle, sorry, line I'm going to put, right, is midnight New York time. Now, midnight New York time is 2 o'clock on this server time. So midnight my time. So that would be 6 p.m. New York time, right? 6 p.m. New York time, that's midnight our time, if I'm not mistaken, roughly. The next I'm going to drop is 6 hours after that. So I'm going from, so basically on my server time, I'm going from 2 to 6, so 2 to 8 in the morning. Then I'm going to go to 2 in the afternoon. Again, these are based on my server, but these are certain times in New York. And then I'm going to go So basically 6 hours to 8 p.m. server time. That's 6 p.m. my time. That's roughly midday New York. Right? Can you see that? And of course, the last one would be, again, 2 o'clock the next day. I want you to see that. So this is the 29th of September. Let's look at this on a 5-minute chart, because if you're scalping, basically your biggest chart as a scalper would be the 5-minute chart, right? What does price do? Well, this here is what we call the Asian range. This is a session. This time here is when a block of traders come in and go out of the market. It was quiet. Can you see that? Can you see that? This now next is what we call London. This is the London session, or the London Open, I should say. What happens? Well, price takes out a low, right? Can you see that? That low there. And then eventually takes out a high. Just for this session, right? For nothing else but, hold on please. Hold on please. Hold on everybody. So 1 quick second, guys. Just need to respond to a text message here very urgently. Once we do that, we are in, look at this, Joe. We're in a buy protocol for this session alone. Only this session, nothing else, right? So this is, and we want to see some displacement, a push to the upside, right? Now, I don't really see the kind of displacement I would want to see, but still, you know, even though I don't see, and by displacement I mean a fair value gap. So I don't see that there. So I probably wouldn't have taken this trade. But if I had, I would have been fine. Why? Price comes back down into this range here and gives me an engulfing. See that? If I put, let me find this thing. 1 second. Where is the, okay. It's all the way up there. If I bring it down back there and then go back to a 5-minute chart. So, oh, I forgot every time I change time frame, I'm gonna lose the, okay, there it is. So pull it back down. All right, now let's expand back. So if I had entered this trade, no, I've moved that away. That should be 6 o'clock. No, 8 o'clock, sorry. 8 o'clock server time. So here, okay. If I enter this trade here, on this engulfing, I have two options. I can put my stop loss basically back down there where the move started. In that session alone, that's 1-1, that's 2-1, that's almost 3-1. But since I'm scalping, I'm going to put it there. Is how I would usually take this trade. Right? Now usually I'm trying to get all the way up. So this is, so I'm trying to, okay, so so this is the 100 level, that's the 161. I'm trying to get to the 261. But forget the Fibonacci. Just take the outer hour. So 1-1, 2-1, 3-1, 4-1, and then the session retraces. And then you're done. Once this line hits, you're out. You would have entered the trade at, so that's 10:07, that's 8:07 our time here in London. And you would have been out of the trade, so 8:07, at the latest you'd have been out of it. So that's 2:02, so that would be midday. So maximum 4 hours and you're done. But notice that in 2 hours, you've already got in 4-1. You're done because you're scalping a session. In essence, this is the session's candle. Price opens, goes down, goes up, and then closes. Can you see that? Then New York starts. So again, you draw basically a line across. I forgot to do that time. The open. So that's where, no, it opened here. It opened here and then came down. Cool. So what are you looking for? Well, you're looking for a low to be swept, right? There's a low swept there. And also you want to ask yourself, where is it getting this from? Now, I here would have loved, this is the low I would have taken because I would want to see one session take its bearing from another session. So there, right? Okay. Market structure break to the upside. Where's that? Here. So I'd be looking for an engulfing. Did we get an engulfing all the way down here? No. Did we? When this ran this stop, did it give us an engulfing while it was going down? No. So we're not in the trade. Now on the way up, it does give us an engulfing. Not only does it give us an engulfing, so now we get rid of this. This is the new, another low that's been taken. Right? This high has been taken and formed this low. So we're looking for an engulfing down. Did we get one? No, we didn't. We actually got a very push to the upside. So no trade here going up and no trade here going down. No trade. And this was news, by the way. Okay? Now we go again. A high's taken. Market structure break is, or break of structure, change of character. Sorry guys, I'm really struggling with the new terminology. That's the first break in structure there, or change of character there, right? Does it come back? Yes. Does it give an engulfing? Yes. The problem now is to enter this trade here and put your stop loss here. That's 3,800. You'd have gotten 221 for the day. I don't like 2-to-1. Also, you can see this is a manipulation session. It's everywhere. So I wouldn't take a trade there. Same thing here. You see price is consolidating here. And I love when it consolidates during Asia. It tells me something's about to happen. Okay. So the next day, what do? We do the exact same thing. 2 o'clock, 8 o'clock. You map this out in advance. Now this is my server time. So this is 6 midnight and 6 again in London, in New York, right? 2 and then 200 and then back again to 2. Excellent. Let's do the exact same thing, right? Let's do the exact same thing. So this is Asia. I don't trade Asia. I'm sleeping, right? First session. Let's see, this candle's high is 2485, and then this one's 24854. This is 24854. That's 79. Okay, so there's no break there. That's fine. However, this is a high here. This is a high here. Not that one. This one. Not you. You. Right? And then there is a market structure break. Or change of character. Sorry, I'm still dealing with the old terminology. Does it come back? No. So, no trade for the rest of the session. Don't chase it. Wipe it away. Now, did it come back in the next session? Yes, it did. Can you see that? So that's still valid. We're still in the same day. Do we have an engulfing? Yes. So this becomes our entry. You can put your stop loss there. Because it's so close, that would have been, let's see. So that's a 1339 stop loss. I would just, it's so close to there, I would just put it there, right? So that's my stop loss. Right? And like I said, this is 2151. That's my stop loss. So let's see. Do I get at least 3-1 or maybe 4? Let's see. So 9, yeah, that's already 4. In fact, that's almost, we eventually got 5-1. Right? Now, it eventually came and reversed against you, but you've picked up 5-1 here. And if you were chicken and you waited for it to get here, well, no problem. So if you waited for it to get here, well, that's still 3-1, right? Something like that. How do you know where to get out? That's not for today, because where to get out, you see this line here? Notice it's already on my chart. Can you see that this line's already on my chart? Where did the line come from? Well, what do you know? That's the open of the week. If you've crossed it so far up, do you want to come back down to it? Nope. All right, let's keep going. Where were we? Okay. So that's then the next session, right? And you can trade every session until Asia starts. That's my rule. I trade, if I'm scalping, every session is live till Asia. So I don't touch Asia. London open, New York / London close, or London afternoon, and then London close / New York afternoon. I'm trading here, here, here. If I like what I get in any one, I'm done for the day. All right? Next session. Again, that's the open, right? Do we take out a low? Yes. And I like lows from the previous session. I trust them a bit more. We took out that low. Is there a shift of structure? I think that's the way you all say it these days. One second, let me see. Where is this candle? Okay, it's there. So that's fine. So the first shift of structure is here. This is the first shift of structure that's taken out. Does it give you a chance? Well, if you want to be aggressive, you enter there, put your stop loss there. It's not bad. That's just not the way I like to do it. Nothing there. Then there's another one here. It breaks structure again here. Does it give you an entry? Yes, it does. Once it goes up here, right? It breaks it, comes back down. That's an engulfing. So that becomes your stop loss. What's this thing doing? So your entry's there, right? Oh, come on. You know what? Let's get rid of that. Let's draw another one. Well, move my line. Okay. Let's draw another one. And to make it clear, I'm going to put, so you can put your stop loss there. Look, see that? And if you missed this one, it came back and gave you another chance. Right? Or I don't think I've taught you know about fair value gaps? Yes, sir. Okay, cool. So from there to there is a fair value gap. From there to there, but price doesn't come back into that one. Is there one here? No. That one there? No. Okay, so this here, that's a breaker candle. Nope, it doesn't come back there. Okay, so this is the profile you are. I would not like taking this one, but this is the one you would have to take. This rejection here is going to be a 1 hour mark order block if you look at it. So in which case you wouldn't be taking this, you would be taking this, which works well because there is a fair value gap in there from here to here, which shows displacement. That's what we like, right? See that there? And price comes back inside. So your entry is the top of this zone there. And then, oh, what just happened? Okay. This computer needs to go. And then this is your trade. So that's 1 to 1. That's 2 to 1. It doesn't get to 3. And then we're back in Asia. Now, bear in mind, at this point, we have now established that this is an up week. By the time this day closes, we know we're in an up week. Are we looking for any more shorts? No. The market's now told us it's bullish. So, by the time we get to Wednesday or Thursday, what should we be looking for? Longs. Right? Right? Okay. So, we now have 2 more days this week, Thursday and Friday, to see if we can make some money. One second. Okay, so now we're in Thursday. We're in Thursday. Which is Thursday? This is Thursday here. Right? No, we're in Wednesday. On Wednesday, we're going to do the exact same thing again. Right? Based on my server time, 2 to 8, 8 to 2, so which is 6 to 6 and back to 6 in New York, whatever the time is in your zone. So that's 6 in New York again, and that's midnight New York. Okay, so drop down the 5-minute chart, repeat the same process again. It's boring, isn't it? But making money is boring. All right, so Asia, we're team not bothered. We get into New York here. Now, this is where you need to be aware where you are in price. What sponsored this move here? Well, if we go back, we can't really see much. So we know although we know this is the open of the week, we've dipped back down inside, but at least we know that this low is here, right? So if we say that this swept this low, where is the first break of structure? It is there. Or the shift of structure, it is there. And you see that it shifted with powerful momentum on a 5-hour chart. That's what we like to see. This is a sign that this is a trade we want to take. Does it come back down here? No. So let it go. Where's the next shift of structure? There. Right? There. Does it come back down this time? Yes, it does. What does it give us? An engulfing, let's move this away, and momentum. All right? So, you buy here. Basically, at this candle is where I would buy. I wouldn't trust this one. This one's where I would buy. You put your stop loss down behind the order block that sponsored the move. That's there, right? Let's count. 1 to 1. Now, strictly the way I trade, I'm out in London. I'm out. You're like, but it went up. I am out. Right? Because New York is usually going to give you, New York's traders are going to do their own thing. With respect to what London did. So in New York, what do you know? We have a market structure shift here, don't we? Let's take this away, right? And then price comes back, doesn't it? Here. This is news. But notice what news does. It engineers liquidity back to where? The same parent zone. So, you know, I told you that even before we got there, when I see this, right? Also, that was here, right? That I'm pretty much putting I told you that if I entered here, one second, where would we have done? There, it came back here. That if I entered there, I'm putting my stop loss there. Remember I said that to you, right? Well, would that stop loss have been safe? Yes, it would have. But now that we're in New York, I don't even need to leave it there anymore. I can now move it here. Because this is now the new leg that sponsored this. And I know we're already in an up week. So we're in the right direction, aren't we? Aren't we? Now let's count. 1, 2, 3, 4, 5, and I'm out. Right? If I'm scalping, I'm out. But if I'm intra-week trading, I'm not. But if we continued, let's assume we caught this as an intra-week trade and we just let it run. 6, 7, 8, 9. Can you see this? But we don't need to do this. Like I said, I'm out here. Why? Because the next day is going to come. 2, 8. So that's 6, 6, whatever New York time is. 6, 12, 6, and 12. That's just the rule. 6, 12, 6, and 12 in New York, right? And this works for any asset class that includes either in New York, either the dollar in a pair with Forex, or anything anything American straight, Nasdaq, gold, oil, any pair with a dollar inside. Okay. So this is going to be the last one before I close. All right. So we already got 10-1 on this one, but so this is New York. This is Asia. We don't care about Asia, do we? London. Is the low taken there? No. So we move it up. Remember, now we don't care about direction. So now we do care about direction because we know we're up. Is the low taken there? Yes. Where's the first proper engulfing? That's this one. Right? But does it take out a high until here? No. So we don't care. This is where it takes out a high. Right? Does it take it out with some displacement? Yeah. There's a fair value gap from here to here. From this candle's high, low, high to this candle's low, right? Okay, so we wait for it to come back. And when it comes back, we wait for it to react. Is this a good reaction? Would you call that a good reaction? It's quite sizable, isn't it? Okay, so this is your stop loss. From here, all the way down to this low there. Why? That's the low that sponsored the move. This order block is what sponsored all this. Right? Okay. So let's count. 1, 2. Like I said, I will probably be out here. By the time we get here, I'm out. Why? Because we're going into New York and I want to see what New York's going to do. Now, could you have guessed this? Well, if you did your analysis properly, let's see. That high there. Okay, no, we're in uncharted territory. There's nothing on we are the highest the Nasdaq has ever been. futures have ever been. Okay, so we don't know what's going to happen, but like I said, I would always come out at the end of London and then let New York give me a chance to re-enter. So now what happens? Because we're the highest we've ever been, a low is taken. Pew. Am I trading this? No. Why? I mean, no. Now, you would still have gotten almost 2 to 1. Just let it go. Does that make sense? Let it go. Because it looks nice in hindsight, but could you really have trusted this was good? No, because you don't know. You're staring at your chart like this, right? That's what your chart's going to have looked like when you got there. You just see that. So, anyway. But then, is there a trade the other way? Of course there is a trade the other way. Remember, it's an up week, right? Okay, so it's an up week. Where's the trade the other way? Low taken, yes. Right? Shift in structure, yes. Did it come down? Yes, it did. Perfect. These are the kind of trades you love. Yes, it did. Did it react when it came down? Yes, it did. Like, look, see. Good reaction. See that, right? This fills you with confidence. This breaker here, it's called a breaker candle, is what sponsored the move. So your stop loss is beneath it, right? That's your entry. Let's count. 1. And then it closes because the day peters out. That's fine. Now, of course, did Asia take it higher? Yes, it did. And if you're looking for an intra-week trade with a refined entry, that's fine. But we're scalping, so just come out here. And then if it was an up week, what do you expect to happen on Friday? How do you expect an up week to go? Price opens, goes where first? Down to make a low, then goes where? Up to make a high, then what next? Comes back to make a close. So we're expecting some sort of retracement of some sort on Friday, which is why I don't like trading Friday. And I also don't like trading Monday, because I'm guessing that those are going to be part of the 2 weeks. You're not always correct, but if you wanted to trade Friday, fine, no problem. Be my guest. 2, and I'm going to close this stream down after this because I'm tired after all the system issues. 8, 2, and 8, and that corresponds to 6, 12, 6, and 12 again. And so, can you see when you break it down into these sessions? Can you see how the market just look at it? See, is there a high taken at some point? Yes, there is. When that high is taken, does anything happen initially? No. Then it takes another high. Where's the first break or shift in structure? Here. After that shift in structure, what are we hunting now? Shorts. So, did it come back for us here? Well, technically, but I don't know if I'm taking this. Right? I'm definitely not taking that. Does that make sense? Do I trust this? No, because it's still not come all the way back up to here. But then what do we know? It gives us a second chance. High taken, right? Shift in structure. This time, does it come back? Yes, it does. On its way back, is that engulfing here? No. Does this engulf? Does this candle engulf this one? No. Does this one engulf this one? No. Is this one engulfed? Yes. Right? So, this is where you enter the trade when this candle is engulfed. And this is a candle that closes and engulfs it. Right? Where do you put your stop loss? At the high of the zone that sponsored that. So this here was sponsored by this order block. It is so close to the high that I would almost always put my stop loss there. So that's your stop loss. Let's count. 1, 2, 3. Have you noticed I always trade past this line because I'm still in New York? This is just when London traders leave the market. Basically, this is my hard stop. I'm never going past this. But somewhere in here, I also expect a retracement anyway. So that's 3. 4, 5, and a bit. By the time you see this happening, get out. Right? That's the market saying deuces. You see how easy it is? Now, I know it's not easy yet because you're seeing this for the first time. But go and study this. Now, what I've shown you happens on a session, every day, every week, and every month. Let me take it further. It happens every hour. If you take an hour's candle or a 4 hours candle and drop it down to a 5-minute or 1-minute chart, you see the exact same thing happen. Open, liquidity sweep, push up, entry, run, reverse. Your job is to see it. Right? Once you see it, you can't unsee it. Now, for someone like you who's already trading, don't start by throwing away the way you currently trade and jumping in here, especially since you're trading live. Just study this on the side while you're doing your normal, your current trading, and see if this can help you with that. At some point, you're going to hate that. Like, do you see any indicators on my chart? There's only 2 indicators on every chart you see of mine. You'll see 2 indicators: vertical lines and horizontal lines. That's it. Vertical lines tell me price levels. Horizontal lines tell me times of the day, week, or month. The only thing you see is a volume indicator, which is not here now because I want to be able to see the volume of trades. So volume, that's the only thing you see on my chart. Other than that, no trend lines, no MACD. So I don't need it because the market's telling you all it needs to tell you in 3 ways: what it's doing at certain price levels, what time of the day, week, or month it's doing it, and how much volume is behind each move. Notice that this turning point here was the highest volume of this session. Can you see? Can you see that? Let's track this. This here looks like a turning point, right? Is there high volume? Is there high volume here? No. No, there's not. At this point, down there, is there high volume? Now, is there high volume here? That's all you need to know. The market's telling the story. right? Is there high volume here? Yes, there is. Can you see? So when it goes up here and comes back down like this, is there high volume? Yes. If there's high volume, you can trust it. You can put your stop there. If you entered here and put your stop there, that's 4866, and came all the way down to there. That's still 3 to 1. Is there high volume in this reversal? Yes, there is. So probably get out here once you see this. And the same thing continues. So let's look at today, the very last one. This was NASDAQ today. 2. Okay, so let's just say 6, 12, 6 and 12, all New York time. Okay. Is the low swept? Yes, it is. Now, you will lose. It's not perfect. You will have losses. It's easy to spot because it's hindsight. There'll be days where you take a loss. It's fine. But let's assume your win ratio is 50%. If you're making 3 to 7% each win and losing 1% each loss, are you making money? If your win ratio is 4%, you can lose 3 trades for every one you win and still make money. So that's the psychology we were talking about. Low taking out, yes. Shift in structure, there, yes. Does it come back? Yes. What does it come back into? This breaker here. That breaker there. Right? First engulfing, see that there? Yes. And so we count. One second. Actually, I need that for the counting. Okay. 1, 2, 3, 4, 5, and we're out. This is why I usually don't trade London anymore, because I found out most of the moves these days most of them happen in Thingamybobby, in New York, the really juicy ones. Okay, we take out a high, right? Do we break structure up to here? We actually break structure here. So this is the first place we break structure, or we shift structure, there, right? But even if it comes, let's assume we wait for this to happen, comes up here, okay, so that's fine. Comes up here. Is there an engulfing? Yes, there is, right? Okay. Where was this engulfing sponsored from? This order block right there. And again, it's so close to the high, just take it. The problem now is that would need to be my stop loss. It would need to be my stop loss. I would have taken it if my weekly bias is bearish. But we're currently in an up cycle. Now, of course, it's easy to say this now that, okay, well, it only gave us one, don't take it. But let's assume it finishes this move altogether. I don't expect it to take this out if we're bullish, do I? So at the worst, I want it to come down in this region. So do I have at least 3 to 1 between those 2 points? 1, 2. Okay, I might have taken this trade. Problem is 3 is very close. So I might have taken this trade hoping for maybe a 2-1, but nah. And worse still, it's a Monday. So, can you see it? Okay, you're picking one side of the market. Let's try and pick against it. Let's assume we say we want to go short here. Price took out the high, right? Right? And so this is where it would have shifted structure after taking out that high there. So after this, it comes back up, right? And you see this. You can actually make the argument that this is an entry south. So this is a trade that's strictly, again, a bot would have taken this trade and lost. But should a human being have taken this trade? Should a human being have taken this trade? No. But let's assume, okay, so this is, let's take it, this is one potential place you would have taken a loss. Fine. 1%. You make it back. So I'm not pretending that this never loses. I'm just showing this is how the market moves on every level. It does this even on the 1 minute chart. Let's just close with this. It works on a 1 minute chart. Look. Let's start from here. Price took out this low. Did it shift structure? No. Right? So no trade. Then it took out this low. Did it shift structure? You can argue it shifted structure here. Was there an engulfing after? No. It took out this low. Did it shift structure? No. Then it took out this one. Did it shift structure? Yes. Where did it shift structure? Here. Right? Was there displacement? Yes, there was. Did it come back to you here? No, it didn't. Did it shift structure again? Look at that. Yes, it did. Yes, it did. Did it come back? Yes. To where? Back into this region here. Into this breaker there. Right? Did it displace? Yes, it did. How do you trade it? You put your stop loss from here all the way down to the bottom of the level. That's what sponsored it. So you enter here, you put your stop loss beneath that breaker, and then you count. Any time frame. Now, what helps you is you want to have some level of bias from the higher time frame. That's it. If you're on a 5-minute chart, you don't need a bias from a daily chart. You can get it from a 4-hour, or better yet, from a 1 hour. And if you're on an hourly chart, a minute chart, definitely a 1 hour is good for your bias for the session. Right? For the session. It works all the way up to swing trading. All right, guys, I'm going to shut it down here. It's been a very, and of course, look at the volume profiles. Look at that. Is that high volume? Yes, it is. Right? Let's look at the next day. Where did the major shift happen? Here. Right? And here. Here for coming down. Here for going back up. Is volume high? Yes, it is. Okay. You go back, you see the exact same thing over and over again. Where did the major shifts happen? There. Is volume high? Yes. Where did the shift here happen? There. Is volume high? Yes. This looks like a shift, doesn't it? Right? Is volume high? No. Once you see this thing, you major shift here, volume high. Okay, no, that's early in the day. Okay, volume high, not so much. Okay, stay away. Actually, but this is significantly higher than all the way here. Look, there's a spike in volume. Is my point. See, there's a spike. Okay. Well, let's come to later. This is after New York opens, right? 12 midnight. 6 a.m. This is 6 a.m. New York. Do we take this? No. Why? Volume low. Then there's a surge of volume in the market, right? There's a surge of volume. Do we take this? Yes. So, anyway, and then where the reversal happens, what's happening there? Surge in volume. What's happening in Asia? Low volume. What's happening in London? Volume increases. Major turning point in London, what happens? Huge spike in volume. So you can trust it. So you pair three, like I said, there are 3 indicators on my chart all the time. Only 3. Horizontal lines tell me what? Price levels. Vertical lines? Price point, time lines. Either days, months, weeks, sessions, hours, at some point in time. A certain time of the day, a certain day of the week, a certain week of the month, a certain month of the year. And then what's the third indicator I use? Volume. What does volume tell me? How many people are trading at that time? Case closed. All right, guys. I'm going to end it there. Have a great night. See you tomorrow. Potentially doing New York. Take care. Bye-bye.